We're now going to investigate advancers and decliners. What we're doing here is we're counting the number of stocks that have gone up or down over a given time period, one day in this case, across an entire segment of the market. So I'm going to pull into GE so you can see this operator change over time. And we're going to plot the advancers. Now, you've seen the rank across operator. What I'm doing is I'm counting across. So I'm counting the number of stocks where the closing price today, otherwise known as the close, is greater than the close as of 1. Now, I don't want to count all the super tiny penny stocks, so I'm going to put in a market cap restriction. 500M means million. It saves me from typing 6 zeros. Now, as it turns out, I put a greater than before my market cap, so it helpfully created a blank for me. Notice I could say the market cap's between 500 million and say 10 billion. I don't want to do that right now, so I'm going to delete that blank. But I certainly could do that. It's very useful for having a between. Now, having done that, I also want to count them and total them across the entire segment. I don't want to divide the segment into little pieces. So I'd say true. If I wanted to count each industry separately and attach the stock's industry advanced decline rate to each stock, I could do that. I'd do that by putting industry in there. If I wanted to round it across the market cap deciles and say that the bottom decile gets one count and the next decile gets the next and so on, I could type rank across blah 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 and then I'd round it to the nearest 10. And that would give me a decile. However, I'm not going to do that right now. I'm going to leave it with true. When I run this, I'm going to get an answer almost instantly. Now, the first time I ran this today, when getting this video, it paused for maybe a minute. But since I've already done it once today, we get a free pass. I'm also going to plot the decliners. Which are going to be created the same way. Of less than, close, close. Actually, you know what? I'm going to do something different here because typing the exact same thing the same way is not as exciting. I'm going to type, instead of doing precisely what I did before, I'm going to type in close is less than close as of 1. Notice it put all those boxes in and I didn't have to hit return or do anything else. That's much faster. Again, I don't want to segment it, I just want to collate it across the whole thing, but I do want to get rid of tiny market cap companies. Now, as it so turns out, since I did this entire video before, this also ran instantly. Now, it may be useful, more useful than the absolute number of advancers and decliners, which will increase. We may wish to divide the advancers by the decliners. So I'm going to create a tab which will automatically plot, and I'm going to divide the advancers by the sum of the advancers and the decliners, because that's the denominator. Almost every stock either went up or it went down. Yes, there are some weirdos that either didn't trade or didn't do anything, and I'm ignoring them. Now, we have too many lines here. Because we have too many lines, I'm going to short term just get rid of the lines. Don't like that line, and I don't like that line. Now we see what looks like a market pulse. Notice that it's kind of flat and even, and then it kind of jumps up and gets more intense right near the end as the market volatility increases. Notice it's very non-volatile right here. It doesn't touch either the top or the bottom, whereas there it touches the bottom here and then almost touches the top there. If I go for a little bit of historical perspective, it will grind and you can see I get all my lines back. Now, in order for me to quickly get rid of all my lines without having to do that, I can unplot all variables. Then I can take the one I want and I can plot it. Then it reran it for me, and you'll notice that the size of this bar, if you look at this blue bar of excitement, the bar got thicker through here, and then it thinned out a little bit, then it got thicker again. You can see how thick the bar was. Now I'm going to actually quantify this. The way we're going to do this, the first thing I'm going to do is I'm going to take the EMA of this, that's the exponential moving average. Now I'm going to put in a slash here, and I'm going to drag this term over to this box. Because although I could take the EMA over advancers days, that will actually run, but that's not going to be a very computable result. That's not going to make any sense. So instead what we're going to do is we're going to take this over a 21-day period. When I run this, this line gets a lot more well-behaved. If I want it to be very well-behaved, I can do it over 251 days. Then it gets flat. If I want, I can make it really well behaved. Oh look, the line is essentially flat. The more days I average over, the closer to 0.5 it gets. Even with this ridiculously flat line, however, you will notice that it drifts around in a very, very narrow range and seems to be drifting downwards. So if you want to appear very, very smart to your friends, you can say the 999-day EMA of the advanced decline line of the stocks over 500 million market cap is going down slightly. More useful, however, is to do this, so we can see what's going on again. Now, if I want, I can decide to measure the volatility of this line. I'm going to create a new tab. And I'm going to subtract the min within. This is taking the smallest value within a given time interval. Here are 21 days of our. Notice how variables are making it simpler because we can increase the level of abstraction without having to retype that whole term all over again. So now we have taken, what this is going to do, it's just going to take the, you notice I've got them in the wrong order. It's going to take the minimum value and it's going to subtract the maximum value within the last month of this advanced decline line that we've been EMAing over here. However, that's slightly silly because we're going to end up with a negative number always. So I'm going to drag this max over top of this min. The system stops and thinks for an 1/18 of a millisecond and decides that swapping the two terms is what I want to do, which happens to be precisely correct. So now, when I run this, I can see that the range is a very small number as well. If I get rid of the advanced decline line itself, I can see that the range had been decreasing in volatility gently, and it suddenly took a spike upwards. However, the range is still well below historical averages, which frequently touch this upper line. So looking at the current market temper tantrum, I'd say there's nothing much to worry about. We had an abnormally smooth period where nothing much changed in the market. If we want more historical period, we can go back here and see that the range, which is a very small number, has been very high before, and it makes this current market temper tantrum look trivial indeed. Notice here we had a 15% span between the worst day and the best day in terms of market decliners versus advancers. And over here we can see this in the actual advanced decline line itself, which is a lot jaggier here. Notice how broad that range is, and certainly right there everything went down. 32% of the stocks went up over a 21-day EMA of those counts. So basically, over that month, you are opening up a negative on your stock positions 66% of the time or more. 68%. It was 68% bad news for that month in your brokerage account, assuming you invested by dartboard. If you invested by magic, you might have gotten better returns. But as an exercise to the reader, I invite you to go back to this time period, select a year, 2008, from January 1st to December 31st, and try and get a positive number out of the market without cheating and going to cash. You will find it very difficult. So over here, you'll notice that the numbers are much closer to 50, and as a result, the ranges are much smaller. This should give you some calm and peace about the current market temper tantrum, which to me is another taper tantrum, and a pointless one at that. And with this, I'm going to sign off.